Hello everyone, this is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Tuesday, May 25th, 2026. So last week, as we had previewed, very little economic information that came out of consequence. We had 3 housing data points. One was slightly negative, that was pending home sales, but then building permits and housing starts both quite a bit better than expected. But again, those don't drive the market, but they are interesting, I guess. Also on Thursday, initial jobless claims as every week. Again, the consensus slightly high. They expected 210,000 and it came in at 209,000. And I know I keep promising we'll never show this Michigan Consumer Sentiment Index again, and I failed once again. The May reading came in off the charts bad. This entire series has just collapsed and has no bearing on consumer spending at this point. Certainly maybe attitudes, but certainly not spending. So the expectation for the May number, Michigan Consumer Sentiment Index, was 48.2 and it came in at 44.8. So again, as you'll see in the spending numbers, it's certainly not impacting consumers' willingness to spend. So one nice point last week, there are a couple of them, inflation expectations fell. I would assume it has to do with greater confidence that there is some endpoint for the Iran conflict/war, and therefore oil prices will be coming back down. Not really sure, but it was a huge, at least for a 1 week, decrease. So the inflation expectation that we use, the 10-year break even, week prior was at 2.49%, dropped 9 basis points last week, which is very solid. So again, the built-in expectation for the average inflation rate for the next 10 years is 2.40%. Also last week, the Atlanta Federal Reserve updated their expectation for GDP growth here in the second quarter, and it is pretty remarkable. They expect 4.3% growth for the quarter. They were at 4% before. So I'm sure this is, well, it's definitely way above the blue chip consensus, which is below 2%. So I don't know. We have been following this for at least 3 years or so, and the Atlanta Fed does seem to be systematically biased towards the upside. So could be the case this quarter. We'll see. In terms of interest rate cuts or hikes, now next month, June 17th, we have a Fed meeting, starts the day before, but the FOMC rate decision is the next day, the 17th. The expectation is virtually no chance of anything changing, tiny 2% chance of a rate hike. Now, we look at the end of the year. We've mentioned in the last couple of weeks, this is completely flipped from what we saw coming into 2026. Coming into 2026, we had the Federal Reserve stating explicitly expect 2 rate cuts. Market had priced in 3. Those have all evaporated. Federal Reserve just changed over. Kevin Warsh, now the chair. But the expectation is we are not getting a rate cut, about 0% of that happening. But 43% odds right now of no change by the end of the year, sticking at the 350 to 375 basis point range. However, then a 41% probability of 1 interest rate hike, and then 16% odds of 2 or more hikes. So clearly, rate cuts are off the board, rate hikes definitely in play. It'll just be dictated by how soon the Iran conflict is over and how quickly inflation hopefully snaps lower as a result. So returns last week in the marketplace, another, I don't know what this is, 7 weeks in a row maybe, S&P 500 up. It's just been fantastic from the bottom, but S&P 500 up 0.91%. And what really worked in the U.S. last week, Russell 2000 up almost 3%, 2.75%. And also the equally weighted S&P 500. So neutralizing the impact of that Mag 7 and just equally weighting all 500 components. A surprisingly great week for that. That was up 2.5%. So on a year-to-date basis, S&P 500 up 9.7%, And the winner here in the U.S., small cap, good for us, Russell 2000 up 16.1%. In terms of international markets, developed market ex-US, excellent week, up 2.1%. Now, on a year-to-date basis, that's up 2.4%, lower than the S&P 500, but closed the gap a little last week. And then emerging markets. Now, this has been the star, geographically speaking, year-to-date. Last week, emerging markets up 1.1%, and on a year-to-date basis, up 20.8%. Fixed income last week rebounded. It had a horrible week before. We discussed that. Last week, again, with the expectation maybe for inflation easing, lower oil prices, the 10-year dropped 3 basis points. As a result, the Bloomberg U.S. Aggregate Bond Index last week up 0.26%. Now, in terms of economic data this week, it is all bundled into one day, which is Thursday. Tomorrow we have the House Price Index, not a big deal. Thursday, huge. Initial jobless claims, as we have every Thursday. Expectation last week was 209,000, slight increase expected to 211,000. But the big number will be PCE, personal consumption expenditure, and core PCE, which is ex-food and energy prices. So the core PCE ex-food and energy for the month of April expected to come in at 0.3% month over month. For April, same as we had in March. That would be great. The headline number, however, is expected to come in at 0.5%, but that would be an improvement. Month of March, that came in at a positive 0.7%. So that will be, out of all these economic data points, the number investors focus on as we go through this week, Thursday in particular. Personal income and personal spending also for the month of April will be reported on Thursday. The expectation for personal income coming back a little bit. It was a very strong positive 0.6% month over month in March, expected to ease down to 0.4% month over month. And personal spending, likewise, really hot in the month of March, up 0.9% month over month. That's expected to ease back down to 0.5% month over month. So that is it in terms of our economic wrap-up. We thank you very much for attending. We'll look forward to seeing you next week. Thank you.